And it was a down day on Tuesday in just about all the commodities sector. Jim McCormick with AgMarket.net is joining us. And Jim, risk off kind of hit the market across the complex, didn't it?
It did. Economic numbers were not that good. That gave pause to the market. Recession fears are kind of moving back to the forefront. And when that happened, we saw not just selling in the commodities, but selling in the equities as well. The one thing we did see some strength was the metals, so kind of a risk-off mentality.
So in the grains, though, on Tuesday, we started off with corn and soybeans lower. And was that profit taking, or was that weather changes, or what was it?
I think it's a little bit of combination. We surged after the crop report in general last week, so that was a little bit. But I think the big thing I'm going to point to was the weather. I mean, going home last week, a lot of people were worried about this storm hitting the northern plains, and it is going to be brutal. 1 to 2 feet of snow, blizzard conditions, some of the worst of the year. But the reality is it seems like the trades moved past that, even though it hasn't hit yet. We're looking at the 6 to 10 day to 8 to 14 day maps. They are coming in below normal rainfall in certain parts of the country, but more importantly, much above normal temps. So it looks like spring is coming very, very fast. And that has a lot of producers talking about getting into the fields relatively quick, coming out of a long 3-day weekend. And I think that was probably added to the negative tone.
But we'd also run into chart resistance. I mean, in both corn and soybeans, we've had a good rally off the lows, haven't we?
We've had a low of the lows. We've hit some chart point resistance. You couldn't accelerate through it, and it caused a little bit of the market to panic. Now, we are seeing a little bit of strength in the front month contract, specifically the May corn and the May beans, and we're seeing them buy that contract against the back months. And I think that has to do with the market is bracing for what we're anticipating to be a friendly a friendly April WASD number due to the quarterly grain stocks coming in tighter than anticipated. So maybe you're getting a little bit of in-user positioning in the May contract, maybe trying to force delivery, as they know trying to get the grain out of the farmers' hands this year is going to be tough.
And just quick, wheat looked like we faded those really tough crop conditions.
We did. Look, we had a nice bounce early. The market gave it up. The reality is the wheat is the weak leg of the spread. The funds are short the wheat. They continue to add on rallies, and eventually they will get out of that position, but obviously they're not done selling yet.
Okay, thanks for joining us, Jim McCormick, AgMarket.net. Full analysis at agweb.com, and we'll have more Ag Day coming up.